It's time for another Southern California housing market update. We're going to give you the single family and multifamily numbers for Southern California. Are we seeing a slowdown due to the war in Ukraine in the Southern California housing numbers yet? And stick around to the end where we're going to talk about interest rates and what happened in the past and what may happen ahead. Hey there. Christian Walsh, real estate agent with Wire Associates. We've been helping tenants and landlords and buyers and sellers make the best decisions in these crazy days, and we're here with another market update. So if you're ready to dive into single and multifamily numbers for Orange County, LA, San Diego, Riverside, San Bernardino, Ventura counties, hit that like button and let's get started. And here we go, diving into the data for single family and multifamily sales in the 6 counties we cover. And here's where it's going to get interesting because we now are seeing the effects of COVID start to hit the 2020 data. And then we know what happens after. And then we get to see what's happening in 2022. So you're going to see that we have a dip in 2020, and it's tough to remember, but I had a picture pop up and it showed a picture of my older daughter at a grocery store on March 15th, 2020, and there was no toilet paper. So already at this time, 2 years ago, we were feeling the effects of COVID. Then we went into the lockdowns and we all know the rest. This data reflects that, helps us remember it. We can see we got 2 normal years, 2018, 2019, normal Marches back then 2020, that was our first crazy March. 2021, you can see the huge rally back we have. Now here we are with 2022, and that's why you're tuned into this video. So let me show you what's going on. And unfortunately, it's a very similar story to what I've been sharing for a while, and that is not enough inventory. So here we are with Orange County. We can see that we have an absolute record low number of new listings, much lower than we've seen before this time of year going back. And we see a drop from 2021 in the number of properties going under contract. And that isn't meant to reflect the fact that demand is dropping. Really what it is there's strong demand, but not enough inventory. So the number of properties going under contract is limited. We have way more buyers. We still have the multiple offer situations out there and people fighting to get properties under contract. So the drop in the number of properties going under contract is reflecting the drop in the level of available inventory. Los Angeles, you can see the drop we had in 2020 due to COVID and the number of properties going under contract, that dropped very quickly. We also had a drop in the number of listings as well. So it certainly affected the market, rallied back, and here we are in 2022. The real challenge is that we see these numbers closer together. We see the new listings and the pending sales closer together like this. The challenge is LA is now at the hottest it's been. So while it's been a seller's market in Los Angeles for a while, these numbers are closer together than they've been, and they're getting close to actually crossing like we've had in other counties. So Los Angeles is an extremely hot market. The other important thing to know when you see, and when we're looking in Los Angeles, Orange County, San Diego, and some of the other markets, but those 3 in particular, the new listings coming that are included in these numbers are huge listings, 10, 20, 30, 40, 50 million or more. So some of that inventory that's coming to the market, obviously that's inflating the numbers on the number of homes that are available because those tend to sit a little bit longer. And at some point in time, we will talk about the days on market and for the different price brackets throughout the counties. Moving into Riverside, we can see the twist that there are just not enough new listings coming. Now, it isn't at all that of much of a crazy record low. We are off a couple hundred for new listings, but you can see the demand has gone through the roof. So while 2018, 2019, balanced markets, 2020 even was a balanced market. Now you can see 2021, 22, it's crazy. So very much a seller's market, very tough for buyers. And San Bernardino, we can see listings are low and number of properties going under contract are low. But I will say, when you look at these numbers, 2021 and 2022 are going to feel very similar. It's not like we just saw in Orange County and LA, where right now is even tougher. And we thought last year was tough. So we can see San Bernardino is a little bit more stable. Still a seller's market, still a tough spot to buy, but not as crazy as some of the other spots. Ventura is another one that tends to move at its own pace and follow its own drum. We can see that pending sales are down, and 2022 is going to feel a lot like 2021. So if you were out shopping as a buyer in 2021 at this time and gave up, now coming back into 2022, it's going to feel very similar. Not much of a change. And then San Diego, we've got the twist, not enough inventory, very low level, off by about 800, and very solid demand. San Diego has continued to be a lot like Orange County, where it's just a very high demand market, very, very tough for buyers. And Southern California multifamily data, starting with Orange County, one of the few places you're going to find these numbers, maybe the only place you're going to find these numbers, is right here on this channel. So make sure you're subscribed. And it's worth looking at this as an investor. You're going to want to see what's happening in the market. And you can see 2020 had a similar effect on multifamily as it did for single family. Getting into COVID, everybody's not sure what we should do. Now it's a little bit more solid because people who were in 1031 exchanges, for example, they still felt the pressure. They needed to go ahead and move forward. Now, you may not remember this, I did a video on it, but they ended up changing 1031 exchange timelines back then. They extended them, so there was extra time for investors to do that. But we didn't know that in 2020, just starting out. So then 2021, you can see demand rallied back, even though at that point in time, there was an eviction moratorium in place. And then 2022 in Orange County, no longer an eviction moratorium. Demand has rallied back for multifamily, and we are at lower levels of inventory, nothing like 2019, where we had that big surge. I believe the reason we had that big surge back then is cap rates were, at the time, we thought about as low as they were going to get. And so investors said, hey, if I'm going to sell, might as well sell now. This is the peak. And of course, none of us could have predicted what happened with values. Los Angeles, we see that dip in 2020, rally back in 2021, and then 2022, inventory's down, but still strong demand. Still doesn't make sense to me. LA County, LA City are under eviction moratorium still. So this is crazy to me. That could be partly why we see the drop in listings. Maybe somebody's waiting to sell their building until they can get some of the non-paying tenants out. But we see here that there's still strong demand in a marketplace where you could end up with nobody paying rent and not being able to do anything about it. Riverside tends to be a more affordable market for investors, tends to be a higher rate of return, and you can see very solid. Definitely had a drop in 2020, had a drop in listings in 2021 that's significant. Listings have pretty much rallied back, and demand has been strong. 2021 and 2022, demand's very strong. Definitely a seller's market for multifamily in Riverside. San Bernardino, just like their single family sales, not setting the world on fire, but it's a solid market with the demand strong. At the same time, listings are down, so still very much a seller's market, but not a crazy market like we're seeing in Orange County. Our buddy Ventura, numbers are usually all over the place, and we find that again. Solid demand. If you're priced right, you're going to go, but just not that many multifamily buildings. It's because the total numbers in Ventura County for number of units is much smaller than the other places we're tracking. It's nothing against Ventura. They just don't have as many properties. In San Diego, we can see that the listings are solid, but the demand is even more solid. So demand is very solid. We don't have the twist like we do for Orange County, but in this, we can see that the number of new listings and pending sales is getting closer. So this is going to be the tightest market that they've had for beginning to March in the years we're tracking here. So very much a seller's market for multifamily. So as you can see, we're not seeing anything in the housing market yet that looks like any sort of a slowdown related, for example, to the war in Ukraine, the increase in oil prices. It's still a very solid seller's market out there due to lack of inventory. Just recently announced was the increase by the Fed of the 0.25% increase in the Fed funds rate. The 10-year Treasury shot up, and now we're seeing an increase in interest rates. In fact, they've just gone over 4% for the first time since 2019. So we aren't going to see this yet in the numbers. This was just announced, but we're going to be carefully tracking to see what effect this has. The last time we saw a slowdown was November of 2018 when rates nearly hit 5%. And I've shown this in previous videos where inventory increased as more sellers put their properties on the market and pending sales decreased as buyers stepped back. Well, after that, rates dropped and the market returned to normal. So we will see if this increase to 4 is the new 5, or if we're going to have to wait to 5% or 6% or even higher to see a change in demand. The good news is if you're subscribed to this channel, you will see it very quickly because we're doing these updates every 2 weeks. And of course, if you're one of the over 2,000 email newsletter subscribers, you will get those updates in your email inbox every week. We have a link below so you can do that. Do you think we're going to see a slowdown anytime soon? I know there's a lot of folks that are very bullish, and then there's a lot of folks that think it's going to crash tomorrow. Let us know in the comments below. Make sure you check out the Southern California foreclosure report. We have a link here so you can see that, where you get all the numbers and can see the increases in foreclosures. Thanks for tuning in. This has been Christian Walsh, real estate agent with Wire Associates, and we want to hear from you.